Hello and welcome. I'm Jane Page Steiner, the owner and publisher of the Greater Cincinnati Nonprofit News, and we're very excited to be partnering with VonLehman on this important webinar, Deciphering the CARES Act. And as all of you are aware, the COVID-19 has impacted all of us and all of the nonprofits in our community. Many of the nonprofits have had to furlough or lay off employees, and many have shifted the focus of their work to essential services. And this has impacted everyone's revenue. So one of the commitments that we have at the Greater Cincinnati Nonprofit News is to provide the best information we can to our readers. And I approached VonLehman to see if they would be willing to do this with us, and they were very excited to join us on sharing information about the CARES Act with our community. So we're really pleased that they'd be willing to do that. And so I'm going to jump in and introduce our speakers. Before I do that, I wanted to share just a little bit of housekeeping in that they're going to present slides and some background and good information for you. And then we are going to have time for questions. So while you're even listening, you can tap in your questions into the chat box, and we'll be watching that. And then once the slides have been completed, we'll go ahead and address as many of the questions that we can in the time that we have left. We are recording this webinar so that will be available and sent to you after the webinar. So with that, I'm going to introduce our speakers from VonLehman. First, we have Keith Carlson. He is the Director of M&A Advisory Services with VonLehman. Keith brings over 13 years of experience in selling and buying businesses, corporate finance, strategy, and capital markets to VonLehman. He primarily obtained this experiences from various advisory and direct investment roles. Because he is well-versed in both buy and sell side of M&A transaction, he is highly skilled in the areas of deal structuring, company positioning, transaction consequences, transaction risk mitigation, negotiation, due diligence, and as well as financial analysis and modeling. So we're really pleased that Keith is with us. And then there's Bryan Pautsch, is a principal CPA and JD with VonLehman. Bryan joined VonLehman as an established and reputable nonprofit tax professional with over 25 years of experience with a top 50 accounting firm. He focused his entire career on tax specialization within the nonprofit industry. Having led the nonprofit tax vertical of his previous firm, Bryan now occupies the role of the nonprofit tax leader at VonLehman. In the early stages of his career, Bryan established himself as an authority in the services of a nonprofit organizations. His passion for the nonprofit industry yields vast experience across virtually all industry sectors, including civic, community, healthcare, Greek, religious, educational, and cultural organizations, as well as private foundations and trade association. So I'd like to give a warm welcome and thank you to Keith and Bryan as they share their presentation with us. So thanks for being with us, and we'll go ahead and get started.
Thanks, Jane. This is Keith Carlson. Thanks, everyone, for being here this afternoon and joining us. I know everyone's got a lot on their minds with the crisis at hand. I'm going to be focusing on the financing portion of the CARES Act as it pertains to businesses. And today, I'm going to touch on really two different loan programs that has risen from the current crisis. And really, there's the SBA disaster loan program, and then there's the Paycheck Protection Program. And later on, I'll hand off to Bryan, who will jump into some other topics, such as the Industry Stabilization Fund, the Employee Retention Payroll Tax Credit, and self-funded nonprofits and unemployment. In terms of PPP updates or Paycheck Protection Program updates, what I'd like to say, if you've been watching news or if you've been following this, or perhaps you've already applied to this program, some things have come out over the last 24 hours that are pretty significant. A couple weeks ago, just by way of background, the government announced a $2 trillion stimulus package that rolled out, and the Paycheck Protection Program was one wedge of that program. And it called for $350 billion of government guarantees that would be provided to financial institutions so that they would then go out and be able to pump liquidity into companies. And what many companies found really attractive about this program is that it had a debt forgiveness component associated with it. And so that $350 billion originally, when it rolled out, they didn't know how quickly it was going to be utilized. Many anticipated on the front end that should it be utilized really quickly, that they would replenish it almost as quickly as they set up the first one. Well, fast forward 2 weeks, and you know, the $350 billion has been used up. So the government guarantees are fully capacitated at this point, and the financial institutions can no longer go to the window to transmit or receive any new electronic verification numbers. But what I'll say is not all is lost on that front. It is most everybody's belief that the program will be expanded, and that Congress will get together, hopefully in the near future, to add to the $350 billion that was already appropriated. And what I'll say is the only unknown is probably what amount that is going to be. So if you haven't already applied for a PPP loan or haven't already talked to your lending institution about it, well then I would still encourage you, just given some of the dynamics we'll talk about today, to go ahead and reserve your place in line. Go ahead and go through the application process, because you don't want to be part of the next onslaught of people that are rushing to the window once the new announcement comes out that the fund has been replenished. So that's an update, and we just heard that some notifications started going out last night that there was a risk that this was going to happen, and then this morning the notifications came out verifying that the risk had come true. It really isn't a risk; it is what it is. So the two different loan programs that have been born out of the COVID-19 situation is, like mentioned earlier, is the disaster loan program and the loan forgiveness, the Paycheck Protection Program loan forgiveness program. And early on in the process, this caused a lot of confusion amongst VonLehman clients. And the reason being is, they were both administered or guaranteed by the SBA. But in reality, they're two totally different processes by which your organization would go about procuring funding under each of these scenarios. So the disaster loans, you would have had to have gone directly to the SBA website at the time that those rolled out and fulfilled their requirements to procure one. And the PPP loans, you would have and will be going to your financial institutions to procure funding under that program. And so it was really two different storefronts, if you will, that you had to go about procuring either one of these. What I'll also say is, by way of a quick update on the disaster loans that we've heard today and throughout the week, and this just goes to show you, these programs feel ages old, but really they're only weeks old, and every day it seems like there's new updates that come out. The disaster loans, we learned earlier this week that they were beginning to cap the amount of funding on the EIDL to $10,000 or $15,000 per applicant. When in reality, when it first came out, they were allowing substantially larger requests to be made under the disaster loans. Well, when they started to run out of money on that, they began capping the requests. And then secondarily, what we heard this week after they capped the requests is they've now actually mothballed the EIDL or disaster loan program altogether for the time being. That doesn't mean that they're not going to come out and replenish it. But right now, the current standing is that the EIDL is kind of on the shelf and is sitting there, and it's the less talked about of the two between the PPP loan program in the disaster loan program. We've already talked about what to do next if you're interested in either of these, but I think it's worth reiterating. On the disaster loans, if and when those do open back up, you're going to want to go directly through the SBA website. There's a set list of requirements that you'll need to have in hand when you go to submit your application to do this. It's a somewhat tedious process, but a few hours of time on your hand, if you've got information of your organization at your fingertips, you can work through it so long as you limit the amount of distractions. And the PPP loan program, I have found it to be much easier to navigate just because of the data requirements are substantially less. And in general, you're going through the lender that you currently do business with. What has been interesting about this particular process is that most financial institutions aren't accepting applications from non-banking clients. And there's some reasons for that, a couple of which have to do with just wanting to show preference to bank clients, but there's also some SBA guidance or mandates that suggested that that's the way it had to be. But that being said, once news began to leak after the program rolled out, that there were banks that were telling people, no, we're not going to serve you. We don't care if we're your home bank or not. I think the stance on where you got your PPP loan from was substantially loosened, and we began to see other financial institutions open up to non-bank clients as early as really Monday of this week. And so it's been nice to see that it's been kind of a communal effort trying to get everyone to the window. In terms of eligibility, I understand that many people on this phone call are nonprofits. Our stance or view is those that are eligible are kind of outlined on this PowerPoint page. And in simple terms, it's if your business has fewer than 500 employees, if you're a 501c3 with fewer than 500 employees, you can be a sole proprietor or an independent contractor, and you can be also an individual who's self-employed. There's also a rule or an allowance for tribal businesses that meet SBA standards. And then they're also allowing 501c19 veteran organizations that, of course, meet the SBA size standard. So a pretty broad definition of who is eligible and who is not for these particular loans. And so I would encourage you, if you currently meet one of these criteria, to certainly look into these loans if you haven't already. Again, even though the $350 billion has been used up for now, we do believe there's more coming. In terms of on the PPP loans, in terms of how much you can actually borrow, I'm going to try to simplify this for everyone's purpose here. In general, what they're doing, what banks are doing to calculate how much you can borrow is they're taking your annual payroll costs, and there's a number of things that make up payroll costs, but taking your annual payroll costs, coming up with a monthly average, and then multiplying that by 2.5 to essentially come up with what I'm calling a borrowing base for your PPP loan. And that, of course, is not to exceed $10 million. I have known of no companies that we are currently working with at VonLehman that have eclipsed that 10 million number, but certainly if you can muster that kind of strength via your payroll cost, more power to you. That's a good thing. The items that are included, and another thing we'll talk about debt forgiveness, the part that everyone loves about this program in a moment. I'm going to encourage everyone to think about what we're talking about right now, specifically for purposes of what you can borrow. It's not necessarily tied to exactly how they're going to calculate forgiveness, but for purpose of what goes into payroll for now, salaries, wages, commissions, or other similar type compensations, cash tips, any payments that you make for vacation or leave or healthcare benefits, any retirement related benefits that you give your employees, and any state or local tax assessed on the compensation of employees. And so in reality, most people actually run payroll through, kind of a reputable payroll company. And I think there's an exception. Some people don't do that, but most people run it through Paycor or Paychex or ADP or one of the larger ones. The great thing about those larger organizations is that they actually have customized their own templates that you can go to and request and say, hey, I'm looking at the PPP loan. I'd like to come up with what my monthly average is. And some of them have created custom dashboards that are specifically designed for this purpose, for this calculation. One thing to note about this that does come into play for some of our clients at VonLehman, when calculating your annual payroll costs, you must cap everyone at $100,000. So if you've got highly compensated employees that make greater than $100,000, when you go to calculate your aggregate amount, you must back off any amount of compensation that is in excess of $100,000 for that period. Okay, on forgiveness, the way that this works, and this is certainly the goal for everyone, you want to maximize the amount of forgiveness that you have as part of this loan, because this is the free money. You don't have to pay it back, and so it really turns into free money here. The way it works is after you get the money dropped into your account, the day it's funded, your 8-week clock starts. And so they will begin to measure all of the costs that you have and how you spend your money. And so long as you spend 75% of the proceeds on payroll and at least 25% on interest, rent, and payment for utilities, you will be eligible for 100% forgiveness on your loan, so long as you've maintained your full-time equivalent headcount, and so long as you haven't slashed anybody's payments, or I'm sorry, anybody's salaries by more than 25%. And so this is what is attractive. If you can kind of keep your frame of mind that is, if you're calling what you're basing your monthly average off of that you use for purposes of calculating your borrowing base, if you kind of stay consistent with what you're doing in that specific time frame, you certainly have the potential to get a substantial portion of your loan forgiven. Some of the feedback we've been getting from clients at VonLehman as it pertains to the forgiveness component is when some realize that they've had to adjust business to adapt to the current climate, which I'm sure is the same for many on this phone call. What people immediately gravitate to is being somewhat bummed out about not being able to get 100% forgiveness on the loan. And certainly, I mean, everyone's goal should be to get 100% forgiveness. But at the end of the day, some forgiveness is better than no forgiveness. And so if someone gives you $100 and say you only have to pay back 50 of it, that's still a good day for you. That means you got $50 of free money. And so the same applies here. And not to mention the amount that isn't forgiven will default to very, very attractive terms, in my opinion, at 2 years and 1% money. This next page walks through the nuance of how your forgiveness could be reduced during that 8-week period. So if you go through and you start to make changes to the number of full-time equivalents during that 8-week period, your forgiveness will be reduced. So we've laid out the equation here, but I would encourage you to kind of work with an accountant or your accountant to see what this equation will look like on the front end for you based off your business forecast, but also in addition, when you go to apply for the actual forgiveness with your lending institution, make sure you run this by them as well. But in general, the math, we've laid the math out on the sheet here. It's kind of the way to think about it is it's pretty much a pro rata, it's a pro rata decrease to the amount of forgiveness as it relates to the payroll based off the number of headcounts that you trim from your business on a full-time equivalent basis. And then the same thing, the other way that your forgiveness could be reduced is if you, like I mentioned earlier, if you slash wages greater than 25%. relative to the benchmark period that they're using. And so the two different dates, you can see the two different options we've laid out on the page here that you're going to be able to kind of benchmark against. And so they're going to look at the period either from February 15th of 2019 to June 30th, 2019, or the period from January 20th to February 29th, 2020, I should say. And so that's what's actually kind of interesting about this calculation. At the time that the window opens up to go apply for debt forgiveness, you as the borrower are going to have the option to pick which one suits you better. And so there might be some advantage there. They did this for seasonal business, just in case there's anyone that's dramatically impacted by seasonality, but it's actually helped a few of our clients at VonLehman just because of the nature of trends that they're currently experiencing. And so with that, I'm gonna pause on the PPP loan program and turn it over to Bryan, because I know he's got some good content to share with everyone as well.
Sure. Thanks, Keith. Basically, what we're going to talk about a little bit, and I'll be very, very brief because we understand that your questions are the most important. So what we're going to do is try to address the questions at the end. And if we don't get to the actual questions, Keith and my contact information will be available. And feel free to give us a call or send us an email about any questions that you have about this program. The first one, the program is the Industry Stabilization Fund. This is like the next loan program dealing with larger exempt organizations, anywhere between 500 to 10,000 employees. And basically, you know, a nonprofit organization is how they define it as. It's a U.S. entity with a significant amount of activities in the U.S. and the majority of the employees are in the U.S. It's again between 5 and 510,000. That'll be local banks and financial institutions. The program itself isn't all fully defined yet as to what's out there and how to go about actually applying for these. I've tried to look for different websites as to how to do it, and I have not been successful in doing that. And then, you know, again, these deal with the larger organizations. So if you're not at 500, you're not going to apply. The good part is that like under the PPP, you have to be a C3 or a C19 organization. For this, it's basically any one of the exempt organizations. It isn't just set for C3 and C19 organizations. The actual, you get to the next slide, Kitty. Basically, again, you can look at some of the loan uses. Again, it's looking at trying to retain the workforce at 90% and making sure that they're actually in the U.S. The loan terms are pretty nice, capped at 2%, and there's a deferral for 6 months. Again, but there's no loan forgiveness here. It's going to have to be paid back. I won't get in the full amount of all the different certifications, but they're listed there to kind of give you an idea of who's going to be eligible and what you're going to have to basically say you're going to do. So that's the Industry Stabilization Fund in a kind of a nutshell. The next one is the Employee Tax Credit. That one basically deals with employees and getting a tax credit to offset your payroll taxes. Any individual receiving qualified wages, well, I guess I take a step back. First of all, the families first, that relief, that credit, that tax or the wages won't qualify for the employee retention payroll tax credit. You can only have that credit for one or the other program. And then the actual organization that would qualify is if it's an organization in which the state or the national government has closed down your operations or significantly changed your operations, that you would then be qualified. So if it'd be out there and you've got a variety of different people and you're serving them and now the government's saying you can't do it, you would automatically qualify. And the other one that you could qualify, because this is an OR test, so either you have been shut down or partially shut down, or you have a significant decline in your gross receipts, taking a look at that. So that's something that you guys can take a look at. I've got the rest of the slides here. I don't want to take away from questions that we have, And it kind of goes into more detail as to how the actual credit is calculated. I have dealt with some C3 organizations, and when they needed to take a look at what's more beneficial, the payroll tax credit aspect or the PPP, they generally found that the PPP was more beneficial. But again, you'd have to look at your own situation. And I think, kind of as Keith kind of talked about, that it is a scenario where you expect to have more funding on the PPP. So if I was talking to an exempt client, you guys would be asking me, what should I do? I would say, go ahead and quantify what the PPP could do for you. So you get all that information. So as Keith mentioned, that you'd be ready to go ahead and apply, but then look also to take a look at the payroll retention credit and see if that would apply for you. If you're a C6 or you're a C4 or a C7 organization, you probably want to look at this because you're not going to qualify for the PPP program. And then the very last one that we have, which is at the very end, basically that is for organizations, nonprofit organization who self-insure their state unemployment. Again, that's more of I see more of it in the C3 opportunities where you choose to go ahead and self-insure, that the government would be willing to pay 1/2 of that of unemployment that you have to pay between March 13th and December 31st of this year. So if you are in that situation where you're self-insured and you have to lay off a bunch of employees, and now you're stuck on you're stuck with the benefits or the amounts that you have to pay for that, the government will go ahead and help you with that. So that kind of gives you kind of a brief summary, which kind of gives us about a half hour for questions, which was our goal. So we'll go from there.
Okay, thanks, Brian and Keith. So what I'm going to do is we have a number of questions in the chat room that I'll go ahead and read, and then Brian and or Keith can address them, and we'll get through as many as we can, and we'll kind of go from there. And keep sending questions if you have them, and we'll get to as many of them as we can. So the first question, is forgiveness during the 8-week period based on expenses incurred, accrued, or expenses actually paid?
Keith is muted.
I'm working on unmuting him right now.
So yeah, that's been a popular. Can you guys hear me? Okay.
Yep.
Okay. Yes, that's been a fairly popular question. What I'll say is that the spirit of it's definitely on the accrual or what's incurred, as opposed to what's been dispersed via cash. And the reason that is they do not want people like hastening extra payroll payments or prepaying rent and doing all these things to maximize forgiveness. They want people just to operate business as usual. Employ your employees. This is meant to incent you to kind of keep employees on your roster, but not game the system either. So it's based on the accrual and not the cash. And so if you keep your books on a cash basis, it doesn't mean you're going to have to go out and, reconstruct or reconfigure your books entirely different now. It just means you're probably going to need to work with whoever your CPA is to come up with what accrual rent, for example, would have been, or what accrual utilities would have been during the 8-week period that the test period or the forgiveness period kicks in.
Okay, good. Okay. The question we have is, for the PPP forgivable cost calculation, is it to the payroll paid during the 8-week period or the pay for the hours worked during the 8-week period?
I don't necessarily know that I understand that question completely, but it sounds an awful lot like the last question. Which is kind of, what is actually captured in the forgiveness amount, which from a payroll perspective, it's really based off of when people actually work. So I'm thinking it's going to be hours, because that's when people worked and that's when you incurred the cost. And that's the way, I'm not a CPA, but that's the way accrual tends to work, is when they actually perform the services. That's when you accrue the expense.
Okay, good. Okay. I'm not sure I totally understand this one, but we'll ask it and see if there's some nuance to this. Do you need to put in documentation to the bank after?
Yes. So what's going to happen once the storm of applications calms down, the banks are going to start to, for anyone that received proceeds, the banks are going to start to roll out fairly extensive instructions to people about how you apply for your forgiveness. But it will be entirely upon you to apply for that forgiveness. And that forgiveness, when you get the instructions, it'll have everything that you need to turn over to the bank at the time of the forgiveness application. They may, depending on your financial institution, they may even send you their template that they want you to fill out. What I'll say is keep your accountant or your centers of influence very close, because I have a feeling you're going to want to have a sanity check with people once you start handing over documentation and calculations as it pertains to these items. Particularly when you're talking about some substantial free money here based off of the calculations that come out.
Okay, good. Thank you. So here's a question. If employees have already been laid off, how does that affect the forgiveness?
Well, it really depends on if you bring them back during the 8-week period or not. And so that's the question. It's kind of I've had a lot of clients in varying or different types of industries that it's a lot easier to bring people back during this 8-week period, this 8-week period that we're thinking about, than others. So for example, I had a lady that owned an ice cream shop that came to me the other day and said, I can't get my employees to come back because, simply put, them getting unemployment checks is more than anything I could do to kind of incent them to come back to our place of business to scoop ice cream right now. And so it's really this fine line balancing act of trying to figure out if you can even bring them back. And again, I'll go back to the comment I made earlier in my presentation. Even if you can't restore 100% employment to where it was relative or vis-a-vis the benchmarking period that you're going to be measured against come forgiveness time, some forgiveness is better than no forgiveness. And so that's something to keep in mind. And the best way I've been counseling, or the best piece of advice I've been giving to business owners, is get this money dropped into a separate account. Have it, even if it's wired into your operating account, let's say, put it over into a separate account, fund very specific expenses from that account. So when payroll comes in and you've got money going out to employees, take money and swap or transfer it over into your operating account to specifically fund those things. And anything that is left over at the end of the 8-week period, you might want to consider that money that's in limbo that you may have to pay back. And ultimately, you have to make the decision as a business operator to either hang on to that money for the 1% in 2 years, or really reserve it and go ahead and pay back the loan, which is the part that wasn't forgiven.
So the next question is sort of related to that, but it's a little bit broader, is how much of this loan is forgiven?
Well, the loan that's forgiven, I mean, it can be up to 100% of the loan. So it can be as low as none of it being forgiven, but that would be a pretty draconian case. I mean, you'd have to not pay wages to people, and you'd have to basically slash your workforce down to the nub. And so some percentage of this loan will be forgiven, and that kind of goes back, if you go to I had a page in the presentation that walked through how forgiveness is calculated. That kind of helps you get your arms around a little bit more of the way it works from a broader sense. Whoever your accountant is at this point should have should probably have a decent template that they're working with that can take your numbers and kind of help you walk through this and simulate some scenarios where you can kind of see A, what you could borrow, and then B, based off of what you're forecasting for your business the following 8 weeks, how much of your loan is going to be forgiven. You can get within the zip code. I know everyone wants to be precise, but I think sometimes getting in the zip code is just what the doctor ordered when it comes to these types of things.
Okay. The next question, what specifically do they include in healthcare benefits? Health, dental, vision, other?
Yeah, I mean, healthcare benefits based off of my reading is very broad. So it's all the healthcare benefits. They haven't really gotten into the nitty gritty or new like different types, but I've definitely seen vision, health, dental, etc. covered as part of the expenses in terms of the calculations that we've seen.
Okay. Can you apply if you have a contracted state lobbyist?
I think that when you're looking at from a standpoint, I'm assuming that this is either a C3 or a C6 organization, and depending upon which program it is, generally I know that the emergency, the EIDL, basically does not allow organizations that are in the business of lobbying. I think if you have a contract and if you have a lobbyist, you're not necessarily in the business. And especially as a C3 organization, there are certain limits in regard to your lobbying expenditures that you can even do. And that's make sure it's not substantial. So I wouldn't think that you would be falling in that definition of an organization engaged in the business of lobbying. Now, if you're a C4 organization, that might be different. But just those are my thoughts, and those are one of the things too that at the end when our email addresses and I think my phone number will be my cell phone will be provided. I'd be happy to talk to the person that sent that question, so we can kind of walk through exactly what you are, what type of organization you are, and whether or not you qualify. I don't think it would be a problem, but we should talk.
Okay, great. Thanks, Brian. So the next one is sort of a statement, which I think leads to, sort of a what do you think? Their comment is our program bank is through a credit union. They informed us they just got the link to the process for PPP loans. We received the link and applied only yesterday. I'm afraid we just missed the cutoff. So any thoughts or comments on, if they're sort of in that kind of a place?
Yeah, I mean, he or she needs to follow up with their banker to see if they got in under the gun. I mean, I did the same thing. I mean, I had 10 clients that were in limbo this morning that I was harassing bankers into the night last night to say, get this thing in as quickly as possible. And I'm just now starting to hear from some of those harassments that, most of them got in under the gun. I heard some pretty interesting stories this morning of various banks, having all hands on deck, with people feverishly keying these things in at their computer. So, I mean, check with your banker. They're going to have the answer, and only they will have the answer. And ask them for the electronic transmission code that comes from the SBA. If they can't give you that, that means you didn't get your spot in line on the 350 billion. Your next question needs to be, how do I make sure I get in line for the next wave and that I'm in your queue and priority for that? Because everyone's belief is that it is going to expand, and so you want your place in line for that.
Okay, good counsel. So this might be a similar type of question. What if you've already applied for the EIDL program and are waiting to hear back last week or the week before? So they're still waiting to hear back.
Yeah, the EIDL program is perhaps one of the most maddening programs I've ever seen the SBA roll out, just because it's made no sense how they've rolled the funds out, the people who they communicate with. Honestly, the only advice or counsel I have is unfortunately sit tight and be patient, because I've had some clients that got communications really quick, and then other clients that, literally they applied the first day the EIDL opened, and I had some clients come to us yesterday and say, hey, I finally found out or heard back. And if you've got the patience, you can always call the SBA as well to ask them what the status is, but just be prepared to sit on the phone for about an hour. It's literally about an hour. I'm hearing an hour and a half to get through to someone. So if you can just plug your phone in and do some work on the computer, that would be my advice, and actually talk to a living human being about it.
Okay. And I also wanted to mention, if anybody has other questions, make sure when you type it in the chat box, you put it to everyone or put it to Jane to make sure that I see it. Okay. Do these loans apply to student loans for college tuition?
I wouldn't think that, from a business standpoint, that you'd be able to use the proceeds for, student loans. I don't know if this question relates to about a week ago. The SBA came out with new loans for colleges and universities, in which they're going to be providing funds to different universities to help students deal with the financial, distress that they're in. So that would be another one, unless you got something, Keith, that would know about that. I'd be happy to talk to the person who wrote that. No, okay.
Okay. We got a long comment and then a question. So it's an organization, says that we are a nonprofit. Our bank is US Bank. We had to wait for them to invite us to apply for the PPPL. We applied Monday. They sent an email yesterday stating change in status, website not available. ED spent the day contacting and finally got a link to be able to access. We provided the final information today. Just received an email saying the money ran out and they will continue to process the case when there was more money. Is this normal from other banks? We only have one paid employee. Nonprofits at US banks were the last in line. And then so her question, or he or she's question is, can you explain what portion of the EIDLL is forgiven? And can we get the PPL, which covers the payroll for 8 weeks, and can use the EIDL for the payroll beyond eight weeks and would be then forgiven? So that was a long ramble. Sorry about that. But I think he or she wanted to give a little background.
Yeah. No, I'm not gonna back over anyone's bank with comments or negative comments. I think some banks did better at this than others. I've got on one hand, working with the banks has been completely maddening the last 2 weeks. On the other hand, I think we all got to realize that, the workload that got placed on their lap, unbeknownst to them, by the U.S. government, drastically went up. So I have to have a little compassion for them at the same time. And so I've found myself oscillating on feelings this week in terms of the banks and how they've handled this. That being said, US Bank, in terms of the clients that I've helped through this, they have been on the slower side of this thing. I don't know the rationale for why they've been slow. I think I don't even know what the rationale was when you really looked at how they staged the different people that could come to the proverbial window to kind of apply. And so it's just been, they've been one of the more frustrating ones, but again, it's hard for any of us to judge or cast stones when it's hard to really understand what they were essentially put through the last couple of weeks. What I'll say about the PPP loan, whoever the banker, whoever communicated that message to you is absolutely right. Get in line, process it, and make sure you're there and saving your line when the funds get replenished, because it will. But also know that when you go through that application process and you finally submit it, there is going to be a deduction for any EIDL money that you took. So they're going to back that out, and essentially, by virtue of doing that, when you calculate your borrowing base capacity that we walked through earlier, you're essentially refinancing the loan using the PPP loan. I don't know if I got all the questions, but it feels like I got most of them.
I think so. And we have the one last question. And again, we have a little bit of time. If anybody else has a question, please submit it into the chat room. And this is sort of similar. Keith, you maybe have really addressed this, but I'll read it just in case there's a nuance that I'm not seeing here. If you get a PPP loan, which covers 8 weeks of payroll, and if we get the EIDL, can the EIDL be used for the payroll after the PPPL is exhausted, and then the DIDL would be forgiven?
So the EIDL comes out of the PPP when you get the PPP proceeds, and so essentially it's really not an issue. Yeah, so I'll leave that one right there. The one area that I think we as a firm or organization at VonLehman, we're going to do some more homework on is there's actually some more loan programs that are coming out in about a week. We haven't had time to study these. The banks haven't had time to study them. So there's some more things that are coming. I just don't know about eligibility at this point. And so long story short is PPP loan is going to refinance the EIDL loan. So you're not going to have 2 loans on your books, but there could be more surprises coming in terms of new loan programs that you might qualify for that are similar in nature to the EIDL.
Okay, wonderful. Good to know. Sort of stay tuned, as they might say.
Yeah, if you're not on one of VonLehman's subscription lists or whatever, just reach out to Stephanie or Brian and make sure that you're added to our email database, and that way you can get messages as we get them, because we're pumping out information in real time as we get it.
Okay, so we've had one more question submitted. How will the unemployment cost sharing work? Will we have to submit anything?
I'm not 100% sure how it necessarily works right now. I haven't gotten any further detail. I would think that it would be something that would be resubmitted, that you might have to pay it first and then ask for it to be resubmitted. So I'm not 100% sure on that one. So we could talk about that a little bit more further also.
Okay, good. Okay, so that is the questions that we've had. The only, I was going to pick 1 or 2 maybe questions that hadn't been covered that were submitted before. The one that, what records will be needed for the PPP loans to be forgiveness?
Yeah, I mean, that's going to be very bank specific. And the reason I'm pausing a little bit there is because that, believe it or not, those items, the how forgiveness is going to be handled is still being firmed up with 100% certainty. And not only is it still being firmed up, I do have a feeling that banks are going to take different stances on that. The one thing that's great about the PPP program is the banks have been heavily indemnified by the government on the program. And so the banks, by and large, should be relying on business owners and business managers to attest to the accuracy of what's being provided without having to drill down too much. So our hope at VonLehman is that the package that you have to follow up with is pretty limited and is limited to more or less what you had to submit to get your borrowing, your application submitted.
Okay, good. Another question that we had submitted online. What do 501c7 groups qualify for?
Well, as a C7 organization, you wouldn't qualify for the PPP. You could go ahead and apply for the EIDL loans. Also, from a payroll standpoint, the employee tax retention credit would also be something that could work. Many times you see C7 organizations, especially if it's the fraternity and sororities, that they might have a related C3 organization as a C3 organization that may be able to qualify for the PPP, depending upon like where the payroll is and what substantiation you have and how much work that needs to be done to kind of document the payroll aspect, and then the bank itself. That's a kind of another issue that we found out is sometimes when you're dealing with organizations that don't qualify for the PPP because they're not C3, but they have a related C3 organizations, what can you do about that, especially if the payroll is being done in the non-C3 entity? And I think from that you'd look at, you'd say you really want to have and talk to your bank about that, because they're really going to be the keeper of the PPP program, and see if they could go ahead and qualify for that. But if you choose not to, and they're employees of the C7, you can go ahead and still apply for the employee tax credit. So hopefully that helps.
Okay, all right, thank you. So another question, if I've reduced our pay considerably, 50% or furloughed for the month of May, but restored pay in June, would I jeopardize PPP forgiveness?
Hey, Jane, you were breaking up. You mind rereading that?
Okay, let me get a little bit maybe closer to my my microphone. If I reduce our pay considerably by 50% or furloughed in the month of May, but restored pay in June, would I jeopardize PPP forgiveness?
It all depends on when you took or take the money. So I don't know. That's a very borrower specific question. And so in that particular instance, if you haven't received your loan proceeds, your forgiveness would be A-okay, you'd be restored. What I would say about the question is if you took the loan proceeds before you furloughed, then you would have some forgiveness reduction applied. But my guess is just talking to everyone out there that most everyone on this call probably hasn't been funded at this point. Some of you may have your electronic transmission numbers, but hardly anyone has gotten their money from it yet. So the answer is you should be good if you don't furlough during the 8-week period. But if you do furlough during the 8-week period, then you might have some reduction to the amount.
Okay, good. So here's a question I think we haven't addressed. Will this loan be public record? In other words, will this information be listed on our 990?
If the actual loan itself is forgiven, then I would think that it'd probably be on Schedule B. That's one thing. If you take a look at these programs, it's not always fully defined, and we're kind of going as day by day. And as Keith mentioned, we'll be shooting out more information as more information is known. But in theory, if you look at it from the PPP standpoint, that might be something that's going to be recorded on Schedule B, which wouldn't be available for public inspection. So that wouldn't occur. If actually it is a loan that is outstanding that you need to pay back, say there's amounts that doesn't qualify for the loan forgiveness or is part of the EIDL, that is something that is a financial obligation that the exempt organization has, and that will show up on their balance sheet like all other loans that are out there. So that would be my thought as to how the 990 is going to react to these programs.
Okay, I think we have time for one more question, and then so we have nonprofits are unable to claim contract employees and payments. As a contracted employee of a nonprofit, what can be claimed as eligible for loan forgiveness by the contracted employee?
Yeah, I mean, I think, Keith, this would go with the PPP program, that you have an independent contractor and they'd go under the same scenarios that Keith kind of explained in regard to the salary that's out there and what needs to be reported by an independent contractor. I don't know those as well as Keith would.
And actually, that's a little bit of a blurry area for me, but independent contractors, in terms of the forgiveness, is basically very similar to like your compensation is very much calculated like the payroll calculation that's used for the borrowing base. So anything up to 100,000 that you've been paying yourself, or you've received payment for, I should say.
Okay, all right. Well, thank you. I want to thank everybody first for attending. And again, I really give big thanks to VonLehman, in particular, Bryan and Keith, for taking some time to, really explain this very complex program. So we very much appreciate it. I wanted to close and just remind everybody, if you don't receive the Greater Cincinnati Nonprofit News, I encourage you to subscribe. It's a free email that comes every Thursday. You see our website on there. It's easy to sign up, no cost, and we do job postings and local and national news and volunteer opportunities and professional developments. So again, a big thank you to VonLehman and everyone who helped put this together today. I hope you found this helpful. Bryan and Keith very generously have offered to address additional questions by email. And I believe their contact information is on one of the slides that you'll be receiving. So feel free to reach out as this unfolds and if you have questions along the way. And of course, VonLehman is always helpful to assist you. And I know they'd be happy to talk to your organization about how they work with nonprofits around this area. So thank you again. And Bryan and Keith, you folks, anything you want to say as we close out here?
Yeah, I guess, what I really look at it as, please don't be afraid to send any questions that you have, along with, the contact information will be, it's my cell phone. Feel free to give me a call. It's one of those things that, you shouldn't be kind of left hanging as to what to do. We can help you out. We'll tell you what we know.
Well, thank you again. And good luck, and everybody stay safe and stay connected. Thank you so much.
Bye-bye.